I think we need a Ukraine update because, I mean, we're talking about all the reasons that there could be a silver lining or the market's bottomed out. I don't think you can know for sure that the markets are going to bottom out unless you know that there's going to be a successful resolution of this Ukraine war, at least a non-escalation of it. And all the things that have happened in the last couple of weeks have been on the road towards escalation. Exactly. So in the last just few days, you've had Zelensky saying that they want to be admitted to NATO. You've got Putin basically annexing or saying he's going to annex the Donbass. And somebody, we don't know who, but according to Radek Sikorski, who's the Polish foreign minister, he thanked the U.S., somebody blew up the Nord pipeline. So what is the common denominator of all these things?
Which Nord did they say was blown up? Was it 1 or 2? Was this
I think it's Nord 1. So it was the one that was actually working. What is the common denominator of all these things? They're all eliminating key elements of what a peace deal would look like. So everyone understands that a peace deal would require Zelensky to give up on NATO. It would require Putin to make some compromises, likely in the Donbass. And it would require the sanctions to be lifted and the energy flows to be turned back on. Well, so now those things basically have been removed from the table, or at least potentially that's what's happening. So I don't see how you're going to get a peace deal now. And so if you remove all the off-ramps, what's left? Escalation.
Well,
so it seems to me this thing's just going to keep escalating.
I thought you wrote a good piece in the American Conservative, Should America Go All In on Ukraine? If you haven't read it, it is 80% of rehash of what we've talked about here for the last year. But there's 20% new in it, I think. And I thought what was interesting in terms of new stuff you put in the piece, and it's a good summary of poker strategy versus what's going on here, is that we've already proven, if you did want to prove that Russia is not a threat, with the exception of their nuclear, we now have proven that they're really not going to be able to do a domino and go into all these different countries, with the exception of obviously the threat of nuclear power. So I thought that was
what I was really
point.
What I was really responding to in that piece is the assertion by the media that Putin is bluffing. How do they know that? How do they know that? I think all of us understand poker pretty well, and none of us ever would have the confidence to assert that we know exactly what cards our opponent holds in any given hand and how exactly they'll play them. What do we do? What do smart players do? We put our opponent on a range of possible hands, of possibilities, and then we evaluate what did their previous actions tell us? What story are they telling through their previous actions? Well, what story has Putin been telling? This is not a guy who bluffs, in my opinion. Or at least that is not the story.
So you think there's a chance he would pop off a tactical nuke? It's a non-zero chance, obviously.
I think if his life is on the line, he is incentivized to use every weapon at his disposal to try and prevent his violent overthrow.
His life isn't on the line here. He could back out.
Not yet, but where's this thing headed if there's no compromise?
I think I'm going to stick with my original prediction that we wanted to ankle Putin. We wanted to prove he didn't have as much strength as he did, and we wanted to exhaust his resources so we could finally basically get him out of office at some point. So I do think regime change via exhausting him. And I think it seems to have worked. We have exhausted him.
Then
now,
you're agreeing with me. You're agreeing with me.
I agree that we have exhausted his... I mean, he's proven he can't fight a ground war, right? I mean, that's a pretty...
Well, no, he's escalating now. He's escalating. You think he's just going to roll over? He's not going to roll over. He's going to escalate.
But I think what we've proven, haven't we, is that he can't fight a ground war effectively. He doesn't have the army. He doesn't have the weapons compared to the West, and he's been exhausted. And I think he's spent now. The only thing he has left is what you're talking about, is the nuclear option, literally.
No. Well, no, there's more intermediate options. First of all, he's just called for the mobilization of 300,000 more troops. So that's
going for
step one.
People are leaving the country.
Yeah, exactly. Look, there's going to be very high costs on the Russian side.
Yeah,
there's going to be very high costs on the Russian side. I would not assume that means that there's something in it for us.
So what I'm saying is, though, even with this, the conscription he's doing, this draft he's doing, forced draft, I mean, he is kind of redundant, but this conscription or draft, whatever you want to call it, has proven that he doesn't even actually have the standing inside his own country. People are leaving. They're looking about to break their arms. Like it's pretty dark.
I think you're making a lot of assumptions there, just like the media who are saying that he is definitely bluffing. What I'm saying is we cannot know that he's definitely bluffing.
No,
listen,
I agree with that.
The United States of America is blessed with being the most safe and secure country in the world and really in human history. And the history is full of humans constantly being at war with each other. So that is a really valuable thing that we have. Why are we so secure? We're surrounded by gigantic oceans. We have these gigantic moats. In addition, thanks to the wisdom of the Monroe Doctrine, for 200 years, we have prevented any great powers from getting a foothold in the Western Hemisphere. We are completely dominant here, and no one could ever stage an invasion of the United States. We only have one vulnerability, just one, ICBMs. That's really it. So what are we doing? We are basically engaging in a proxy war with the person in the world who has the most ICBMs, and we are basically putting ourselves on an escalatory path with him. This would be like if Achilles had gone in front of the walls of Troy and basically taken off his armor and stuck his foot in the air and drawn a little bullseye around his heel. That is what we're doing.
Or the other side,
why in the world? Why would we do that? Why would we do that?
Or if they are the last real threat, and they are the Achilles heel, if we can
they're not the last threat. They're not the last threat. We're never going to be out of threats, okay?
Well, we got two major ones with ICBMs, but anyway, it looks like we're in the end game now. What do you think happens here?
We're not in the end game. We're on a path towards escalation because all the off-ramps have been removed. That's my point. And instead of trying to find a diplomatic solution, first of all, we keep removing off-ramps, and then we blithely disregard the threat to ourselves by saying he must be bluffing. This is incredibly stupid. The better question to ask is, hold on a second. The better question to ask is, what's in it for us? What's in it for the United States of America? What is the vital interest that compels us to risk our security? There isn't one. This Donbass region is the Franz Ferdinand of this situation. It is not historically important to us. We have invested in it all of this importance. And we are potentially turning a regional war into a world war. We are sleepwalking towards this. Unless somebody finds an off-ramp, we are escalating our way into a much larger conflict. That is my point. And I don't see anyone should re-enter the markets with this geopolitical risk hanging over our heads.
Yeah, this is kind of like what I said a few weeks ago, and JP Morgan put out an analyst report today saying that they were shifting from being, call it roughly positive, sort of like Chamath's point earlier about being a little bit constructive in the markets right now and coming in and finding opportunities to buy, to realizing that the sum of the portfolio of tail risks right now, outweighs the upside that may arise from finding these low-priced opportunities in the market. And that seems to be the prevailing market sentiment right now, is that there are too many of these moments that, while each one of them is low probability, the impact is of such high severity that the aggregate value, expected value or expected loss of all of them is actually quite significant, and that is heavily weighing on the market. And so to Chamath's point, I think, and to the question earlier about market conditions, one catalyst for upside in the market, while there is fiscal strain and economic strain and growth strain, there is also this geopolitical strain in the market. If one or more of these things starts to resolve, I think that weight starts to come off the markets. And you can see things move up.
Look, I can see the market taking off like a rocket if Ukraine gets resolved.
And I do think
you're right. It's all fat tail risk.
It's about to get resolved.
I think that can potentially be the political motivation here, which is that enough people like Chamath and you start making the calls to your representatives, pointing out how strained the market is because of this tension in the region right now, that maybe there is some path to resolution that becomes more active rather than passive because of that.
This may be a little controversial, so we can talk about it, but I think that the markets would have reacted much, much more negatively to a nuclear incident 3 months ago than now, and may not even react as much as we may think it would 3 months from now.
But what do you mean by nuclear incident? You mean a nuke goes off or just a threat?
You're saying if Putin blows up a nuke, the markets may not react that much?
I think that the markets are basically ring fencing Russia-Ukraine risk in terms of currency instability, but that's sort of now gone away. We've ring fenced the energy risk because it looks like energy reserves in Europe are actually going to be pretty meaningful. They're going to spend whatever it takes. So all of the second and third order effects, it would be a humanitarian crisis, which would be horrendous. Okay. But the markets don't, whether we like it or not, react to humanitarian crises. They react to the second and third order economic impacts of those things. And if you actually try to think about what the second and third order economic impacts are, you're seeing many of those things get solved. And so what it would be a highly isolating effect. It would be a humanitarian atrocity. He would be completely cornered from a worldwide perspective. The monetary and fiscal implications of that may not be as meaningfully disruptive today as they would have been 3 months ago. That's what I'm saying.
Well, one thing I should clarify, I like Freeberg's analysis of the fat tail risk, because I'm not saying it's likely that this conflict goes nuclear, but I don't need there to be a high likelihood in order for me to be very concerned about it because of how disastrous an outcome that would be. So if you're doing an expected value analysis, it's really hard to analyze the expected value or negative value of a low probability disastrous event, right? That's the classic fat tail risk. I do think that if the markets think they have priced in the effect of this war, then I think that's an argument for a lot of downside to this market, because it seems to me that we're on a one-way ratchet here. All the off-ramps for a peace or a diplomatic solution have been systematically taken away, and all that's left are potential escalations. So
no, I hear you, but how did those translate those escalations to outside of those two countries and into economic terms for the rest of the world?
Oh my gosh. Well, I mean, if the war spreads, here, I'll give you a couple of scenarios. I mean, well, here's one. I think we're just assuming that China's going to stay out of it. Imagine if you're China and you're watching what's happening and you're worried that actually Russia could lose this war so badly that it emboldens hawks in America who want to target China next, who are basically on this global struggle against autocracy. You're going to look at that and go, wait a second, is it really in our interests for Putin and Russia to be completely toppled by this global struggle against autocracy? It seems to me they could enter the Russian side, not militarily, but in terms of support. So they would have an incentive, again, not to lose an ally. And then by the same token, I think the Russians could lash out. I don't think they're going to go nuclear right away, but I think they could pull a Grozny. I mean, don't you think that the next step here?
Explain what that is.
Well, when, in the Chechen war, when Russia was losing, they just rubbled Grozny. I mean, they basically leveled it to the ground. So, I mean, Putin hasn't done anything like that yet, but if he's facing defeat, isn't that something that would be on the escalatory ladder, is to basically start leveling Ukrainian cities, destroying key infrastructure, all this. And then what is the response to the West?
Yeah, I know.
Because the West may say, you know what, that's unacceptable to us.
I agree. No. I look, I'm not debating how bad all of these things are. I'm just asking the question, what are the second and third order economic impacts? Because the market doesn't reflect human atrocities. We may want it to, but it just doesn't do a good job of that. It does do a reasonable job of reflecting a discounted set of events in the future related to economic events and impacts. And all I'm saying is that, the most obvious impacts of this war have been to currencies, to commodities, and to energy. And the world has had 6 or 7 months to reroute what they've needed to roughly solve a large percentage of those problems. It doesn't take the fact that this is a bad war and it should end. I'm not saying any of that.
Right. No, look, you make a good point, which is that, look, the market discounts cash flows. So how do the cash flows get impacted? You may be right that valuation multiples have gotten close to correction. But I think the thing that we don't really know is what earnings and profits and revenues are going to look like next year. And part of that is about the hard landing, right? Like, how inflated are all these companies' revenues and earnings because of what happened?
I hear you, but this is why that chart is so important. Every other time except in 1983 in modern history, so the modern history that we have all lived, says that the stock market bottoms in the first third of a process. And so if you think that this process ends in 24, that's a roughly 24-month process, 21-month process. We're in month 7. We're in the power alley of what would map to the last 6 or 7 patterns of behavior.
Yeah, I mean, I guess you may end up being right about this prediction. I guess what I'm saying is that I personally would not want to enter the market until some of these fat tail risks are taken off the table.
Well, talking about nibbling in the market for a second.
I'm not saying they're likely. I'm just saying
I understand.
that. Yeah.
I understand. And obviously, none of us want this to happen. I'm just asking a very specific question, which is, and making an observation, which is, I wonder how the markets would react. And I don't see it being down 1,000 points. And that may be wrong, but
by the way,
Yeah, it would certainly be shocking to see that. Yeah.
The diversity of views that you guys all share, I think, really represents the market. There
well,
is
what
no
view do you have? You too. You have a view.
dude. I'm like, what the fuck?
Wow. I mean,
What is your view?
hand,
No, but what is your view? Is your view that we're okay? We're about to just go through the toilet? Like, what is your view?
From an equity markets point of view,
Or just in general, yeah. Like equity markets, your temperature. How do you feel? Like, how do you feel?
yeah, I'm worried about money not moving.
What does it mean? Money not moving.
I'm really anxious about invested dollars. Everyone seems. I think I mentioned a while ago that dollars were kind of locked up in March, and then I went to this conference, and people were like, "Yeah, we're loosening up and making a plan again in July," because the market was kind of turning back up, and now equity markets are turning down, bond markets have turned down, interest rates have spiked, and there's a bunch of these currency problems. So I'm very nervous about the flow of capital, which I remember happening in '08, and I remember happening when we were all joking over text when COVID happened, and we're like, hey, the market can only go down 10% a day for so many days in a row.